In today's episode, we talk to Bjorn Schafer about the path from 500,000 to 5 million with less trial and error. We go deep on defining product market fit, message market fit, and product segment fit, and why it matters to build the muscle early to drive revenue. Enjoy. Welcome, Bjorn.
Thanks for having me.
It's fantastic to have you. We've known each other for a while, had many fantastic conversations about go-to-market. Who are you? What do you do?
So I'm an entrepreneur, I would say. I founded my first company in 2009, shifted then to B2B quite quickly. Had the great honor of scaling the B2B part at Urban Sports. I'm joking when money was still cheap. So really hyper growth from almost zero to more than 20 million. And I was just leading sales and customer success. And when I left, I thought, okay, there's a even smarter way to build up great companies, aligning marketing, sales, customer success, and product. So fast forward, I invested in 12 B2B startups, written a go-to-market book recently, and working with young entrepreneurs supported by VCs from seed to Series A. So getting at least some structure in place after you've reached product market fit. And I know we will dive into this in more detail later on.
Yeah, great. I'm extremely excited about it. You already answered my second question, how did you get into sales? But what I'm really interested in is, so on your LinkedIn, you say, go from 500,000 in ARR to 5 million in ARR with less trial and error. Why exactly that phase, and what exactly do you mean with that?
Yeah. So there are two main reasons, I would say. So 0.5, at least in Europe, to 5 million is where you have to transition from product market fit to, I call it product segment fit, and then go to market fit. So you get some decent traction in your product or services, and at some point you should kind of unclutter all the little mess. So you have multiple ACVs, you have multiple segments, you potentially have multiple use cases, and it's great to have this traction and get the response by the market. But then at some point, I think, and I truly believe, that you have to focus on the most promising segments, because you cannot handle more than two ICPs, two use cases to really align go-to-market and the product. And that's how I call it, kind of product segment fit. And this normally happens between 0.5 to 2 million. Depends a little bit on the type or the ACV and the product you are selling. I had a client in pharma, and they did kind of super high tickets up to 1 million. Then I would say it's more than 2 million, 3 million that you mask and double down on one or two use cases. But if you have kind of 15K, 10K, it might start earlier, or at least it's where you should start thinking and building up that muscle in your organization. So this is why I'm focusing on 0.5 to 5 million. The other thing, frankly, is there's less politics. So it's still a very entrepreneurial setup. You can work with the founders directly. There's still a lot of uncertainties. And as an entrepreneur, I just love this kind of supporting, in particular, first-time founders, together with their investors, building up kind of the hypothesis, and then get things into motion and try at least to skip some of the errors you might or could take.
Yeah. And I saw that you worked with around 100 companies by now. So we had Tess DeHart on the show recently as well. So you probably know him as well, right? So you both work with different investors, Point9, Sherry, and a bunch of different folks. I'm curious, how do you define product market fit? What's that for you?
Yeah, so we had it. I think if you asked 10 people, at least in the German-speaking area, you will get 10 different answers. I'm a huge fan of Stage 2 Capital, who said, okay, basically you need what. So there's one part, of course, to build up this international traction and sell to new clients, but it's at least as important to get measured or measure what is coming post-sales and call it leading indicators for retention. So some indications that the product is not just used, but you deliver or start delivering the impact you are proclaiming in marketing and sales. Mm-hmm. And ideally, you also get an indication, ideally data-driven, that it's not just retention or leading to retention, but also leading to expansion. So that's one way to see it. The other thing is kind of to have kind of the general mindset, as I see it, is where to get product market fit, you try to. So when you have message market fit, you have a product statement or a problem statement which is responding to your solution, and you get replies. So you potentially build up pipeline. So product market fit means for me that this early indication of messaging which is resonating with the market gets kind of closed in terms of there's real revenue coming in, with still a huge variety or broad variety of exploration in terms of, okay, that could be a small, medium, or even enterprise target company, which is then leading to different ACVs, but also the use cases. Of course, you have some problem indications, but what is really happening with the product while the customer is using it is still kind of volatile. Let's put it that way. So, but this is kind of building up some traction, getting paid, and getting more and more into delivering value, ideally with a measurable amount. This is kind of strong indication of product market fit for me.
Yeah, I love that you start with expansion and churn, because I think, typically to sell something is one thing, but then to actually deliver on your promise is the most important thing, for sure. And whether you have, a product that relies on usage metrics, right? And even, customer like usage retention and engagement, like in many consumer products, or you just look at the cohorts and kind of the 12-month cycles if you sell like annual deals, right? I think that's like, obviously there's kind of a time gap, but I think is extremely important. And then product message fit, I mean, like, what is that for you? I mean, it's another term, we hear a lot, but then, what does it mean actually?
So do you mean message market fit, or because product message fit or message market fit? So I think it's
I think I mean that. Yeah. Both.
Okay.
Both,
so for me, message market fit is So you have to start somewhere. So let's take an example. So you have a value hypothesis, and you basically tailor, and you have ideal customer you're approaching with, and message market fit means even if you haven't sold anything, if you tell the same story in terms of I have the same copy over and over again, and I get indication that of better replies, faster replies, then it starts with message market fit, that it resonates. My messaging is resonating to my target audience. And it doesn't mean that you haven't, because we are talking about, I only do B2B, we're talking about sales cycles of 3, 6, depending 9 to 12 months. So if I would just judge on revenue, that's still kind of a long period of uncertainty. And that's why I try to break it down and say, okay, I just had another entrepreneur on my show, and he said, okay, basically I just look at reply rates. Do I get any kind of positive replies? Do I get any kind of first call, which is an indication that we are doing something right?
So do you see a lot of early stage founders and also go-to-market teams using kind of the outbound motion to actually test the message market fit and then improve on that? Or, have you seen other ways of doing it? And so, I mean, I know you love data, right? You basically say, okay, you have to measure to understand, learn, and iterate and improve. I mean, I'm fully aligned with that. But like, how do you move closer to this message market fit?
Yeah. So I think for me, it's about, of course, it's about data, but we know it's still, we're talking about early stage and it's messy. But what I like to test is, because I truly believe also later on with sellers that every person, or kind of every person can just handle X amount of different use cases and or value propositions. So I'm looking for at least some consistency in terms of messaging, value proposition, storytelling, basically, which I'm over and over testing and improving regarding narrative, arguments, and so forth. So, and also to have, because of course you can, depending on your target group and your product, I think at the very end, to get fast market feedback, you should combine, of course, cold calling with LinkedIn outreach, messaging, etc. But then again, it should be consistent in terms of, okay, these are the keywords, this is the key value proposition, this is what we believe could be kind of a message, solution, or problem fit.
Yeah. And I mean, I think it's typically always in context of the persona you're targeting, right? Because they have different problems. They might have the same overarching problem, but the way they look at it and the different kind of pains and different levels of pains, right? And it resonates very differently to them and the way that you tell the story. And then obviously it goes from the story to how do you even, formulate it on your website to make it, drive conversions and so on and so on.
And like you're saying, it's super messy. If you have, and what I believe, and we will, you were asking for some of the tips and tricks and lessons learned. I think when we just take this as an example. So in this super early phase, just assume we have 3 different value propositions, and we have different types of companies and X amount of different personas. Out of a sudden, you have a matrix which is really, really messy. So it will become messy quite quickly. So what I'm looking into, at least finding some indications of, okay, this is some wording, some messaging which is consistent, where it gets sticky to X personas, or this use case is resonating into the market, to really get a little bit hold of this chaos out there.
Yeah. And I think this is actually something that is important in the early stage, but it's also important later on, right? I think when you have the second S-curve and you launch a completely new segment or product, or, it's typically the same journey over and over again, right? So I don't think it just applies for the early stage. Well, who is your primary persona? What are their fundamental pains? Like things that really matter to make them move, right? Most pains are acceptable and you don't really want to change. I think most personas fundamentally want, to remain the status quo because change is always risky. And then, how do you create that message that actually maybe, gets them interested to have a conversation or check out the product, and then you move from there, right? And as you said, I think it usually it's like even knowing who your primary persona is, and then just making sure that you understand that persona end to end, to understand the different levels of pains and what it means for their career, create the value proposals in a way that they can ideally also measure them, right? That's actually really hard to do, and something that will never go away. But okay, let's assume we've nailed that, right? And this works, right? You speak a lot about
to interrupt, because I think another harsh reality, or some call it the beauty, is even product market fit is never set in stone for life. So it's and I think a lot of people underestimate it, or they are hoping that it's kind of set in stone, and if you have marked your territory and find your niche out there. But it's I think it's super important to have this mindset of continuously improving, being curious to learn what is happening in my customer base, and of course exploring additional segments. But it's fascinating and it's cruel on both sides, I would say.
I think that's such a great point. I mean, the way I always refer to it is like product market fit is on a scale from 0 to 10, and you can always go up or down, and it doesn't matter how much revenue you have. And I think what we've seen in the last 3 years, right, 2020, 2021, and now, is that a lot of companies actually lost product market fit. That sounds so extreme, but maybe they just went down like 4 on a scale from 10, like from 8 to 4. And suddenly, and this can have many different reasons, right? Like it can have, and it's very hard to know what are the reasons and to diagnose why this happens, but you see it in the numbers, right? You see it in pipeline generation, pipeline conversion, right? Stage conversion. And I think the reality is also like that it's not only the like external factors, like, this drastic change in interest rates and growth at all costs and just, hiring like crazy, which obviously is very good for most software companies. But I think it's also true that like most segments or industries are fairly competitive or hyper competitive, right? So you have certain things that suddenly change the game, and you have to stay on your toes. But I think it's a great point you're stressing there. Like, what's product segment fit for you? And I mean, how do you move towards that?
So when I start working with clients, so let's take this product market fit for the time being. You have some market traction. Normally, it's kind of quite messy, or let's call it broad. So multiple use cases, multiple segments, potentially even kind of motions. And what I'm looking for is having comparable, repeatable, and ideally scalable product segments, but also use cases. And to just give you an example, when I was at Urban Sports, we basically had two use cases. One was kind of leveraging our B2C brand in a time where employer benefits was quite new. We had a really appealing brand. We had the young companies, startups with a young workforce, and they loved doing sports. And we kind of managed to become basically a currency because it was cool. It was supported by the company, and that was one angle to support employer branding, to boost them, have a different currency, and so forth. The other thing was kind of this, I would call very, very boring health management, where you have kind of legal regulations. It's entirely different use case. So, and at some point we doubled down on entirely employer branding, and it changed everything, because out of a sudden we were kind of really indulging in this kind of storytelling in how to become an outstanding employee and how to become sexy. And we weren't talking about kind of health. Of course, it was part of it, but it's like when we had the first wave of organic food in the German-speaking area, organic food was pretty boring as well. It was kind of this reform house, and it was it wasn't sexy at all. But it changed over time. Organic was, I know the producers, it's fairly traded, it's healthier, but it's also kind of sexy. It became a lifestyle. Mm-hmm. So this is kind of where I believe this is, for me, product segment fit, that I'm telling again and again the same story, which is resonating to the next customer because he or she is totally buying in the use case and potentially the industry or any kind of segmentation criteria you're going for.
So let's maybe dive a bit deeper into this. So let's assume you had 1 or 2 million in ARR. You see a lot of stuff coming in, right? And like, what are signs that you don't have this, right? Like that you don't have product segment fit? Like what are you typically seeing in the companies?
So I had recently kind of a prospect. We aren't working together yet, but he said, okay, we are running at exactly 1 million plus, and basically every new client is different than the other one. We cannot find any kind of pattern in terms of, is there a use case pattern? Is there an industry pattern? It varies also in terms of ACV, and especially 1 million is kind of, it's dangerous because if you have kind of 1, 2, 3 enterprise clients and they are getting let's take 150, then you have 3, it's half of the revenue is coming from diverse customers with diverse use cases. So this is, I think, a classic example that you have no repeatability whatsoever.
And that is probably in terms of which ACV size you have, whether it's like small, medium, or enterprise. It probably could be the different industries you're serving or the different use cases you're offering. Is that like how you would segmented, or
Yeah. For example, I give you another example, because I had a client. They had one part was enterprise C, so really up to 1 million, and some part it was recurring, some part was also in terms of one-off project migration, etc. So you have to double check: is it true ARR or is it just annual revenue? So that's a fun fact. But as soon as you somehow, especially founders and or investors who have a huge network and able to sell into enterprise quite early on, it's great, but it's risky as well, because it's not repeatable at all. And then somehow they got that market traction selling smaller tickets, still 100K, to a different array of potential customers. But there was little overlap in terms of, okay, if we slice one or two focus segments, it was still nearly impossible.
Mm-hmm. And so how do you make then this decision, right? Like, let's assume you have 3 enterprise customers, you have, 50 other customers. And I mean, like, how do you move, like, what data points do you look at? Because I assume it's not just data you look at, right? You also need to understand the whole thing end to end. But like, what are things, how do you move towards that, and how do you make those decisions, right?
So, yeah. And to manage expectations, if it would be that simple, it would be kind of highly unprofessional, and I would say it would be fraud. No, but I have to walk you through. So one thing is, as mentioned, I've written a book recently, and it's one thing actually I've overlooked for quite a long time, is how to score or how to evaluate these segments. And I kind of updated or edited the scoring model with 6 dimensions to get a better idea of why is there change, for example. Because in early stage startups, everyone knows, and I think some learned it the hard way, if you cannot make any kind of progress in 6 to 12 months, you have a serious problem. But at least from my experience, it correlates strongly with the type of the product you are selling, of course, but it also depends on the industry and the decision-making unit. So to have kind of a multi-dimension assessment in terms of why change and how fast can really help to reassess kind of segments. Also in terms of adjacent segments. So say I have one client who is doing pharma on the one hand and hyper traditional, super slow moving publishing houses. So there is
pharma is moving faster than publishing houses.
Yeah, but it's really kind of, it's a strong bet to have entirely disconnected kind of verticals. So what I'm saying is basically it could be handled with a scoring model on a meta level. But then that's why I love working with at least some traction. You can also look at especially what is happening after the initial sales. So how does adoption look like? How does churn look like? What is happening in terms of expansion? Really diving deep into how is the product used, and also circle back in kind of the mid and long-term vision of the founders and the product team. And then bringing some of the elements at the very end. We're still talking about early stage. It's still a very entrepreneurial phase, if you ask me. But I firmly believe in, at some point, you have to focus and allocate dedicatedly resources to really make that proof that 1 or 2 focus segments really become focus.
Yeah. I mean, I think it's a great example, because obviously if people from pharma go on your website or get an email, right, they might have a very different way of talking about things than the traditional publishing houses. So if you're large and you can segment that out and you have the resources to do it, then it might make sense if the product works equally well. But initially, right, like, I think everybody's searching for this, ideally one motion that has a core use case, a core segment, industry segment, and also in terms of sales cycle and ACVs, similarity to repeat that, right? And And I think that's what you're getting at, right? Like that's essentially the goal, or?
Yeah, or at least kind of to narrow down the options and kind of I call it's focus versus friction. So if you have kind of if you have everything and nothing, it's again, you might reach product market fit, but there will be kind of that glass ceiling. And then even if you say, okay, let's turn this chaos or purely opportunistic play into, we have a hypothesis of this is industry number 1, this is industry number 2, this is potentially use case number 1 and 2. At least you have much more focus than before. And this is what I truly believe in, and what I also love to prove in getting things done, because if you have this clarity, then you can basically do the reverse engineering and say, okay, what needs to happen in terms of messaging, what needs to happen in terms of go-to-market motion to actually get data points and getting things on the ground.
Yeah, that would have been my next question. Like, so let's assume you have this, right? You found it, right? Like, how do you then double down on it, right? Because it has a lot of ripple effects, and you just mentioned 2. But yeah, what are the things that, like, once you have product segment fit, like, what's the impact of that to, marketing, sales, product, right? Like, what do you typically see there?
So when you look at the entire customer journey, basically there are 3 main KPIs I look, and one I'm cheating with. Now, actually, I have 2. So first of all, I'm looking at lead velocity rate. So meaning, how is pipeline generated in terms of, and then again per segment, per use case, and then see, okay, what kind of channels are feeding our pipeline consistently. So I think that's a very powerful metric. It requires a discovery framework, but once this is aligned with everyone, we are talking about the same metric. And frankly, in an early stage company, I care less about, is this marketing led or sales led at the very end. I'm looking at CAC payback or cost per pipeline, because I think it's much more team to really get this segment right and this traction. And then in phase 2, we can optimize everything. So this is kind of the first KPI I'm looking at. Am I capable to increase pipeline generation consistently at some level of reasonable costs? The second part is looking at sales velocity. Is kind of, because I have already the number of opportunities and looking about the win rate, ACV, which is nice, because then ideally you have either you have a bet in terms of higher ticket and smaller ticket, or ideally, or you have just similar comparable ACV ranges, but different use case or verticals. And then, of course, we're looking at the sales cycle in terms of, am I moving faster? Because again, why am I loving product segment fit so much? Because due to the fact that I'm boosting this kind of trust, because I have done it already gazillion times before, it will increase the win rate and the sales cycle pretty much for sure. And the last KPI I'm looking at is either net revenue retention or leading indicators for retention, because NRR, depending on the product and motion, comes in 6 or 12 months, and that's why I'm very, again, pragmatic, but I'm looking beyond adoption. So what is happening in terms of how do we create value and align this impact or value again, and that's why the book is about a flywheel, is to align this feedback post sales with the marketing and the sales motion.
And what are signals for revenue retention or expansion?
So there's a great example of Slack back then. It's not from me, but it's from stage 2 and highly recommended. So at first they looked at pure adoption and say, okay, if, for example, more than, I think, 2,000 messages were sent in any given period by X amount of users, this is an indication that the product is getting sticky and sticky. But then they combined it. There is even more conviction or more probability of a retention or even expansion if we're getting connected with the CRM. or if we have users from different departments, because then it's not just a kind of a sales community, but it's kind of really an entirely company communication tool. So this is what I liked in terms of that's always individual, but what I learned over time, this is kind of one of the game-changing tools in aligning go-to-market and product, and try to find some product data-driven indications of not just adaptation, but impact.
Yeah. I think that's so important, especially in product-led, right? Like, what's kind of the first-time activation, and then what is success? And it's not just, right, like, okay, you have, an N of 3 and then they message, but in terms of then commercializing that success, like you just said, right? I think Slack is a great example, because like we all know, like once it's in the company and it has become and replaced email, which I think it does for many, right? Whether you use Teams or Slack, like internal email, then it is really sticky and very hard to get rid of. And I think, obviously different products have different challenges. So if you're in the enterprise early and you sell, $1 million deals and the sales cycles are 12 months and your renewals are, 2 to 3 years, then, sell a lot of those and raise a lot of money quickly. So you have more runway to make it work. But obviously, if somebody gives you $1 million, especially in 2024, then it also means something, right? So I think it's just the fact that somebody buys into you solving a problem that is worth paying them like $1 million for, I think for most startups would be also a great thing, right? So I think it's like two extreme examples on one or the other end in terms of ACVs, or at least the go-to-market.
Sorry to interrupt, but even if you take the kind of big enterprise, of course you can't do it with these kind of cohort analysis and leading indicators, but there are some ways to have a kind of a health scorecard, whatever, but it all comes down to how is the product used, and can I derive from product usage? How do I manage to derive or kind of anticipate the usage, what kind of value or impact is created? Because at the very end, maybe fruit for discussion, at the very end, I personally care about, can I justify the renewal, not just for the user, but also for the economic buyer or the budget holder. And everything I do in kind of to get the first initial sales should be continued post sales. So I call it's a muscle, and that's again why I only work with early stage startups, because the impact is so much bigger for me to build up and help founders to build that muscle, that end to end you are looking at the same numbers and really working hand in hand as a team to make the product even better for your customers.
Yeah, I absolutely love it. I mean, I've been thinking a lot about this idea of leaderboards by persona. So if you build a product in a specific category, for a specific team or persona, right, where do you sit in the leaderboard, right? And I think that's actually a really interesting question, because the further down you go, the less likely is it that you'll be renewed. And then the question is, how is that leaderboard changing in terms of consolidation in your space, right? So I think it's like, absolutely subscribe to that. And I think this, like, how do you move from, okay, this is cool and we really like it and solves a real pain, to, okay, this is how I quantify that pain and this is how I quantify the solution. I mean, I think that's something that's extremely challenging. Any tips there? Anything you've seen that help? I mean, we could probably talk about that for another hour, but give us the short version.
No, but I think I've so in all transparency and invested in this company, but Paretos, they do decision intelligence, and what they are able. So one of their core value proposition is, with the help of AI, they do better predictions than the existing quo. And one centerpiece of the product and the dashboard is that they are showing the status quo, and also showing instantly and over the entire period of time, they're showing what is the delta and what is the impact delivered. And this is one example where it becomes super, super tangible, and so this is status quo, even with your your internal improvements, this is how we are kind of doing an even better job.
Yeah.
Or I see it's quite easy, and I'm still surprised that people do not take advantage of this. So sooner or later, everyone is kind of calculating any kind of ROI for the company. So they are asking some of the main KPIs they're looking at the status quo, and then somehow they are making the deal. So might happen. Yes, I see you nodding. So, but as soon as you're shifting into customer success, all the kind of surprisingly this data disappears.
I'm smiling because this is so true, and I think this is actually where the renewal starts, right?
Yeah.
Like actually, you know, you and I think, you know, okay, if your customer doesn't look at this, as a company, you should become really good at thinking, how do you make the, you know, assumptions in your ROI calculation or your proof of value, or however you want to call it, right? Like actually tangible, right? Measurable, and then you can show that you deliver on them and that you outperform them, right? But I think most have like some sort of, you know, model in a G sheet or an Excel file, and then, you know, it's like a justification mechanism to the CFO, but it's not fundamentally, you know, being executed against. And so I think that's like something that is so important. I think the great companies actually they understand it, right? And they, you know, I always get this like idea of Loom, you know, telling me how many meetings I save per month, right? Which, I mean, you know, it's like, you know, do you believe that or not? That's the other question, right? But at the same time, I think building it into the product and clearly displaying it is something that, you know, is probably a lot more relevant in 2024 than maybe 3 years ago.
Yeah.
So something worthwhile thinking about and executing on.
I give you another example because I recently had a Pascal from Acto on the podcast show, and he showed me that how their algorithm is turning. So the customer is giving direct feedback how useful the information is, because they kind of support the sales team with basically relevant information. And there is in their product there is kind of a voting, basically ways to show how relevant and if this information was relevant. So they have built it in the product to improve the algorithm and getting direct feedback how valuable they are. So of course you still have the management perspective, but I'll more and more, it's one of my my favorite passionate topics right now, how to really align go-to-market and product, because there's so much potential and so fascinating if really these kind of, wouldn't call it departments, but two perspectives are working even better together.
Awesome. I mean, look, I think we could continue talking about this. In the interest of time, when is your book appearing? When are you launching it? And what's the name? Where can people buy it?
Okay, thanks for that platform. So it's out already, so you can order it on Amazon. It's called Funky Flywheels. In German, we will make a start in German. I'm working hard on English as well, and it will be shipped on the 7th of August, but you can order it today, so no further excuses if you like that.
Well, we put it into the show notes, and maybe also link to the model you referred to earlier today. Any final words you want to share with the audience?
No, it was a short while, and if you have any kind of challenges, if you would like just to have a chat about go-to-market, there's always a first free contact. So I really love that topic. I'm super passionate about. So just reach out if you're up for a vivid discussion and good coffee.
Awesome. Thank you so much. Thank you for being on the show.
Thanks, Yannis. Bye-bye.